Let's get live to Sydney and talk to a Rio shareholder this morning. James Bruce helps manage more than $3 billion of resource stocks at Perpetual Investments. He joins us from Sydney. And would you say, James, that there you are, I found you there, James, that these impairment costs are not a big concern? We shouldn't see more going forward?
Look, I think Rio has done the right thing here, and certainly the management have done the right thing in not accepting bonuses. This is a backwards-looking impairment as a result of the Alcan acquisition, and reflects the reality of what's occurring in the aluminium business. We would not expect further impairments from here, and especially as the company is right-sizing the business and taking the actions required to improve profitability. So we wouldn't expect further impairments.
Okay, but we have Albany saying that the business remains strong in iron ore and copper. Do you believe him? Are you going to stick with your holdings in Rio?
I think the other two factors that came out of the result was firstly the strength of the balance sheet and the confidence of the board increasing the dividend, and secondly the excellent cash flow generation of the company, driven by great operational performance. And this is a company where really there's two sides of the business. One's going very well, and that's the iron ore business, and the other one is clearly struggling in aluminium. But the much bigger influence going forward will be the outlook for iron ore and the low-cost position that Rio has in iron ore, producing iron ore and selling it delivered into China at about $40 a tonne, compared to selling prices of $140 a tonne. So even if iron ore prices were to correct, there are still going to be very healthy margins from Rio's iron ore business, and the growth that's coming through in that business will certainly do the company well in the future.
Okay, so what about the second half dividend? Wow, I mean, it rose 34%. So as a shareholder, do you like the fact that you're getting more back in a dividend, or are you kind of confused as to why they don't want to keep this cash and invest in better profit-making businesses in the future?
I think there needs to be a balance with all companies in regards to its capital management between investing for growth and returning funds to shareholders, and we think this is a prudent measure by the company. Certainly the Australian investors have access to franking credits, and this is a good way to give some of those franking credits back to investors. So we applaud this as being an efficient use of that capital.
Okay, James, one more question for you. This has to do with the CEO, Tom Albanese. You said that it's prudent for them not to have accepted a bonus, but do you think he should stay at the helm of Rio Tinto?
Look, I think the chairman has shown full support for Tom over the last couple of years, and the operational performance, as I said, of Rio has been well managed under Tom's stewardship, and we would expect that to continue.
Okay, James, thank you so much for that. James Bruce, portfolio manager, Perpetual Investments, where he actually owns some Rio Tinto shares.